Alrighty, guys, welcome to tonight's charting session. It is Wednesday, November 1st. Hopefully, everybody is doing well. So, today was FOMC. We ended up taking 3 trades on the live. We'll go over those. I took 2 trades today. We'll talk about the ones I took and then the other one Johnny took on the live. So, we'll go over both of them. So, going into the day, did not trade the AM. We decided to stick out of the AM again. A lot of the times when we have NFP, or not NFP, FOMC, I won't trade the AM action because a lot of the times everybody in the market is waiting for Powell to speak. Not a lot of the times you will see either in the morning sessions see slower action and then wait for NFP, or not NFP, sorry, FOMC, and that is when we'll start to see momentum start to kick in. So a lot of the times when we do have FOMC, I'll wait. Won't trade the AM. Let the AM set us up for PM. And that's normally how I like to go about FOMC. Let the morning set us up for whatever the FOMC move is going to be, because a lot of the times with FOMC, the first hour, 2 hours beforehand, if not even the entire day before leading up to FOMC, is when price starts to either accumulate, we start to chop, and it's because there's no volume flowing into the market. Everybody is waiting for Powell to speak, and that's when the volatility starts kicking in. So that was kind of my plan going into the day, waiting for Powell to start speaking. And this is my specific plan for FOMC. So going into the day, when we were on live today, I said, this is what I want. This is kind of what I'm watching for, and this is what the plan is going to be. So what happens is at 2 o'clock, right? We have 2 o'clock. This is normally, if you guys want to take notes on this too, this is for almost pretty much every FOMC is the exact same plan. This is what happens almost every FOMC. So write this down if you want to. Number 1, 2 o'clock hits. 2 o'clock Eastern is when FOMC statement releases. 2:30 is when Powell normally comes on stage to speak. So what happens is 30 minutes after 2, leading up to Powell, we have accumulation. A lot of the times, we're going to have either a manipulation move, we're either going to consolidate, we're going to slowly start bringing momentum into the market, and then we're going to set us up for a later move. So basically, the first 30 minutes of 2, I normally don't trade. I want to see it start to play out. Now, once Powell gets on stage is when FOMC, in my opinion, really starts. That is when you'll start seeing momentum. That is when you'll start seeing price direction, efficiency in price. You'll start seeing more volatility. So what happens is starting from right when Powell gets on stage at 2:30, the first 15 to 20 minutes after 2:30 of when Powell comes on stage is what we like to want to see a manipulative move. So first 15 to 20 minutes is normally the fake out move. After Powell comes on stage, he talks a lot. The 15, 20 minutes is what we want to see be the fake out move, and then see a reversal the next 30 or the next rest of the market until close after that first 15 to 30 minutes of whatever the fake out is. So my bias going into the day was watching, waiting for Powell to come on stage, and then recognizing where the manipulation move is to then flip my bias and play the reversal. So that was my mindset going into the day. So looking at NQ first, so I took the trade on ES, but we'll talk about NQ. This was the first trade that we ended up taking, or that Johnny took, and I missed my entry on. But on NQ here, we can see, again, 2 o'clock opens up right here. So 2 o'clock ends up opening again. What did I say? First 30 minutes, normally wait out, normally going to be accumulation. This is the first 30 minutes, exactly what we expect. Accumulative action, setting us up for the regular move when Powell gets on stage, right? Nothing really going on here. Nothing really going on here. I don't think you take any trades here. You wait for the first 30 minutes until Powell starts to speak, and then that's when we get the volatility, right? So this is the first 30 minutes. We open, we say, we're patient. Again, noticing I am not looking to take any trade until we either pick a side here, which is we have buy side resting up here, and we have sell side resting down here. I want to see us pick a side. So Powell comes on stage, we get a nice pump up, and we end up taking out buy side. So again, at this point in time, what am I looking to see here? We're back inside the previous weekly opening gap. I'm looking to see displacement to the downside and go all the way back to the PM low that we created. This is now sell side. I'm looking to see displacement and a sell-off to now start that internal sell model to target sell side. So I zoom into a smaller time frame. Again, we're watching at this point in time. This is when we can either, number 1, target the internal draw, or we can wait for the reversal and wait for the manipulation. So I was trying to do both. I knew that once we came up and manipulate and we took the highs and we had this displacement, we were going to sell off to take this lows. So the trade I was looking for on NQ is here we go. This was the displacement move. I was looking to see us come up here so I could take a short. I was trying to get a really good entry on this. Looking back, I didn't need to. Again, it's not bad. Again, there's times when it'll happen where you miss your entry, and there's times where you won't. this was one of the times where I just wanted to see us come up here, and we never did. We ended up just selling off hard. So Johnny ended up taking the short on ES, which was, we had a bearish SMT at this point in time, and he took short right when ES tapped this imbalance. So right when ES tapped this imbalance on the 1 minute, he tapped in short and then got literally a straight down move to that sell side level. So on NQ, I ended up missing my short entry right here. We ended up holding this first imbalance and then sold off. And then after we sold off here, I was again still looking to take shorts in this imbalance. And then of course right here, we didn't tap that either. It was just a straight down move. And then again, right when sell side gets taken, I'm no longer looking for shorts, right? So at this point in time, ended up missing the sell off. Johnny ended up catching. I know a lot of you guys who caught this sell off today. I'm curious to see who got in the short versus how many people didn't. Nah, me, ES, me, yeah. Okay, so okay. So a fair amount of you guys caught that move. That's good. So again, this is one of those trades where I don't think you need to be upset about this. Like this is a great, if you caught this, that's great. This is exactly what we wanted to see, exactly what we were expecting to see. I just ended up missing the entry for my fill. And again, what you should be proud of and what you should be thinking about is, again, building good habits with this. If I don't get the entry I want to see with this, I'm not going to risk skewing my risk to take advantage of a move like this, right? I'm not going to risk that. So if I don't get the entry I want and I seem to just don't get the fill that I'm looking for in the market, I'm totally fine missing out on a setup. Why? Why is that? Because guess what? I'm building those good habits, and those good habits are going to stick with me way longer than the money I would have made on this trade if I broke my rules, right? So we're staying patient. We stay disciplined. Again, don't get the entry I want, then I miss the setup. There is countless opportunity that comes into the market every single day. A lot of your guys' problems is you guys get so flustered and so upset when you end up missing the setup you're looking for. Guys, the market is not fucking going anywhere. You're going to wake up tomorrow and the market's going to open at the exact same time every single fucking day. You think that it's the last trade you're ever going to see in your entire lifetime. There is always going to be opportunity, guys. There will always be another A+ setup, right? So that's what you kind of have to think about. Any time that you see a good setup that you end up missing, you have to tell yourself, you have to say, dude, there's always going to be more opportunity. There's always going to be another setup. Do not force an entry if you do not get the one that is given or the one that you want, okay? So after this point in time, when this sell model then finishes, again, we take sell side. At this point in time, I think that we can still go lower, but what I'm watching for is to see the displacement and to see the rejection. So at this point in time, I'm saying, okay, this is what I'm expecting to see is the manipulation move that I plan to see going into the morning, right? The first 30 minutes is the accumulation. We see the top being taken. Powell comes on. The first 15 to 20 minutes from what Powell is normally the manipulation move. So I zoom out on ES. What I do notice is on ES, we've been super bullish on a bigger time frame. 4 hour, we have just been, again, look at the order flow. This is what I am expecting and what I want to talk about today. Is my bigger time frame bias bearish? Yes, it is. But the reason why I was so bullish going into this is because I'm focusing not on the bigger time frame structure on a daily or a 50 or what model we're in, but I'm noticing what we are looking like on a 4 hour just based off of the order flow. And when I look at the order flow of this chart right here, we have a move up, we make a higher low, move up, higher low, move up, higher low. So now this is the first imbalance we've ever created now on this move to the upside, right? This is the first ever actual imbalance we've created on this big move here on the 4 hour. So I'm expecting price to manipulate, right? Aligning with FOMC. Keep in mind as well, we also have this 1 hour imbalance overlapped with the 4 hour. So what I'm expecting to see is the manipulation move I was already expecting with FOMC. I'm now looking to align this with a model that I would trade, right? So the plan for this is, hey, I'm recognizing, hey, looking on ES, we have equal lows here. What am I looking to see? I'm looking to see equal lows get swept, bounce off of the bigger time frame imbalance, look for displacement, and take this thing back long. And not only is that a trade that I would already look to take, but aligning the time, right? Aligning the time with FOMC. And that's what I want. That's what I want to cover with you guys tonight. It's aligning time. Now, this is just specifically for today because it's FOMC. But what I'm looking for is not only is this a setup I would already take, But the time and the reason why this is such an efficient trade and the reason why there was literally zero drawdown and it went straight to my PT is because this is a time-based trade. So my goal for this, my plan going into the day, again, this is why I always say, do not take a trade unless you have a plan. And the plan going into the day or going into FOMC session was exactly what we wanted to see, which was 30 minutes accumulation, right? Powell comes on stage, the next 20 minutes, fake out move. Hey, 20 minutes, where's this fake out move to? Wow, we're selling off. Okay, what does that mean if the first 20 minutes is going to be a fake out? We're probably going to reverse. Hey, guess what? Where do you think we're going to reverse at? Where do you think what has to happen first before we reverse? What has to happen first, right? What does markets do? What are the 3 reasons why markets move? What are the 3 reasons? Hunt liquidity, rebalance inefficiencies, and rebalance to equilibrium. Guess what we did on this move to the downside here? All 3 of those. Hunting liquidity, equal lows, rebalancing to an inefficiency, bigger time frame on this 4-hour, rebalancing to the inefficiency, and rebalancing to discount. Actually, I don't think we reached discount of this range, actually. What? I think did we tap that? We might have hit it to the tick, actually. Actually, I think we were like literally a tick off of it. 0.25. So pretty much all 3. But that's the bias that we're looking for. Again, it's a way of thinking. Why do markets move? Use that in your bias. Use that in your brain. Rewire your brain. The whole goal of why I always repeat these things is because I want it to get to a point where you guys, the confidence and the confluence that you have when you're trading should be based off of reasons why the market actually move. Okay? Not just because, oh, it looks like a long model of what, my teacher taught me, or, hey, I saw this on a textbook once, this should work. Understand why, right? And the more that you understand why and the more that you see it repeat, it's going to become so clear and you're just going to be able to read it like a fucking book. That's why, like, new people that come into the market, or new people that find ICT, or new people that find me, or just anything, they'll see like a trade like this and they'll be like, how the fuck is that? Like, how do you even take that trade? Like, how do you know that this is going to happen? And it's just, number one, it's a bunch of fucking experience and watching the same thing happen ever again, but it's time-based. I'm expecting to see this big of a move because not only is this the setup I would normally take, but you're aligning time with FOMC. So the trade that happens here, so this is the trade that we ended up taking on ES. Sorry, I wanted a whole spiel here before even talking about the entry here. So once ES has now taken this low, I'm no longer looking for shorts, right? I'm looking for this to be the manipulation move to then go higher. What happens so the first trade I actually took was a loss. The first trade, I took the long too early, which was right here. And why was this a loss? What is missing with this trade? Again, what do I normally say I need for a high quality trade? What do I normally say I need? What's the list? Yep, you got it. Stop raid, right? Bigger time frame draw, some sort of liquidity being swept, displacement, imbalance, and a stop raid. Did not have a stop raid with this trade, so this technically was not an A+ setup, right? So, again, everything I need to see, drawing liquidity higher, manipulation, we have sell side being swept, we have displacement up, but we didn't have the stop raid. So, first trade I ended up taking, a little bit lower quality setup, not a bad thing. Could have still ran on this, still could have made money, but had a tight stop on this. Gave the longs a shot early. Again, this is not a bad thing. Gave the longs a shot early here. Ended up coming back down. Got stopped out on this low for a small, I think I lost like a couple $100 there. We sold off all the way back down to this low. Now, right when this low gets taken, I am confident that this is now going to be soup. And I said this in the live. And I re-jumped right back in longs. Noticing where NQ is at this time. NQ comes all the way back down. Makes a higher low. ES, lower low. Right when we get this displacement move to the upside, I jump in long right on this move back to this imbalance. We tap this. Literally, again, zero drawdown on this trade. And end up taking this all the way back up. And then let the runner go to 2 to 2.5. So, the model for this, exactly what I need to see. Sell side swept. Stop raid, displacement, imbalance. And we ride this thing all the way back up. Again, aligning time with the FOMC reversal that we would want to see anyways. Any questions on this? Any questions on this trade? And then again, of course, notice where we ended up starting to slow down. Standard deviation, 2 to 2.5. So any questions on any of those trades so far? Turtle Soup is just an entry model with an SMT. There's a bunch of videos on Turtle Soup. The RR, I mean, the RR would be around here because the average from where I took most of my contracts off. So the RR is around 5, 1 to 5. Wasn't the first entry playing off of a stop raid? Not internally. Not internal, no. This is playing off sell side, yes. But a stop raid, in my opinion, you need both. So let's talk. That's a great question. So yes, is this a stop raid? Absolutely. But internal. So once again, if I'm looking at, let's draw this here. Market maker buy and sell model. This is pretty much, again, looking at this is a market maker. This is sell side of the curve. Let me, yeah, hold on. Let me draw this in here. Let me explain this. A great question, because we'll talk about this. Okay, this is buy side and sell side of the curve, right? This is the manipulation move. If you look at a market maker buy or market maker sell model of ICT, it looks like this. You have an original consolidation. Bang, 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 bang. A manipulation. Start of the sell model. Right? Doom. Come down. I'm trying to reposition this so I can actually see it. And then you have a stop raid one more time. A market structure shift. And you have buy side of the curve. So this is a market maker buy and sell model. And you have the manipulation move. You have the market structure shift. And then you have the moves up afterwards to eventually run back to buy side. And then, of course, again, sell side here. Market maker buy and sell model. You will see this anywhere you look in the market. Anywhere you look, okay? This is how I see the market. Every single thing that we go over, any concept always reverts back to this. Always reverts back to this. Now, let's just talk about this and think about this for a second. All of the concepts that we trade, whether it be fair value gaps, buy side, sell side liquidity, power of 3, stop raids, all are in this model. So, looking at this, knowing that this is a model, where do I look for entries, right? Where are the trades here? Because I know that this is the model, so where are the trades? Number one, let's go through these different things, and you'll start to see all of the trades that we take are all go back to this, but this is what happens on a bigger time frame. Now, this could also happen on the smaller time frame, like today, right? But hey, like this would be the first trade, right? Oh my God, power of 3, manipulation, displacement back down. I take the shorts. Right here, where am I targeting? Internal sell side. Wow, internal sell side. Now, this is like, oh my God, we're now having a displacement to the downside. This is now switching structure. Wow, what does this now become? A breaker? Oh my God, where do you think we're going to go? Back to the breaker, displacement? Oh my God, look, take another short because we've now switched fucking trends here. Wow, where am I heading? See new lows and move to the downside? Where do you, again, why am I taking a short here? Because the external draw is the sell side level. Now that we've had this move. Guess what's also happening here? An internal stop raid. While we come up, don't take that low. What do you think we're going to go? Come back up, take this high once again, stopping out all those traders, and then going back lower. Every single fucking thing, guys. Like, it's hard to talk about because I truly believe that this concept and most of ICT concepts are something that just gets wired into your brain the more that you see it happening. And this is more complex. Like it's more complex, this idea, and I know that if you're flustered by this or you're confused by this, that's totally normal. That's totally fine. what I just want to make known is I want you to have this in your brain. And again, looking at this is this. Why? Let's see. Let me clear the chart here. How is it the same? You have the original consolidation. The original consolidation at the highs. You have displacement. You have the internal consolidation. Internal consolidation. You have the manipulation move. You have the market structure shift. You have the internal consolidation and the internal consolidation before coming back to take buy side. You will see this everywhere. Everywhere. And again, targeting that external sell side level. This model, the more that you start to understand why the markets are doing what they again, I always repeat to you guys, there's things that I will always say, which is I always say, wait for structure. I always say, what has to happen first? When I say these things, when I say wait for structure, or I say what has to happen first, I'm saying what has to happen first in this model for me to get a high quality setup. Guess what? If I'm looking at this, let's say this is structure right now, and everyone's like, guys, Justin, what are we looking to take a short? Am I looking at the long here? Am I looking at short? I say, wait, because I don't know. You don't know at this point in time what model is going to play out until you get this. When I say wait for structure, it all has to do with the information required for me to recognize what model we're in. That's why I always say, if there is no confident bias, I need more structure to give me that confident bias. I always say, wait for more structure to get a bias. When I say that, it means you need more to recognize what model we're in or to recognize whatever the draw on liquidity is. So then, once we have this, what do you think I'm now thinking? I'm looking to see this become now a breaker. Again, I need more context, like if buy side got swept or whatever it is. But I'm now looking to recognize what model we're in, where's the external draw, what's the internal draw, how am I going to take advantage of this market maker buy or sell model, and wait for what has to happen first in price. Make sense? Do we all understand that? I don't even fucking remember what the original question was. I don't even remember what the original question was. I'm sorry, but I'm hopeful. I'm hoping that answered it or helped her. That was solid. All right. Market maker, basically. The fractal inside of the power of 3 model, is it acts a deeper view? Yes, absolutely. Abso-fucking-lutely. That is why, oh my God. Okay, yes, absolutely. Power of 3, guys, power of 3 are internal. Okay, the reason why when you see a market maker buy model like this, you'll see these little internal squares. Notice, most of these little internal squares include what? Include what? A stop rate. Include a stop rate. Because when we are in a market maker buy model, we need liquidity to move the market. And without manipulation, the markets will stay in the same spot. So when you look at a move like this, notice all of these little internal moves here. It's always, oh my God, hey guys, I'm in short right here. Let me put my stop at this high. What do you think is going to happen here? All of the traders that enter short and then get stopped out for then to move to lower. Wait for the retails to get stopped. Again, one more time. You have a low, get stopped. Reversal, have a low. People that are now chasing all of the shorts. People are now chasing. Where do you think they're putting here? Oh my God, everybody gets stopped out. No, just to reverse, get stopped. Like, that's all it is. Anywhere that you look, when you look at the market maker buy or sell model, that's all it is. Again, zooming back into the original example that we have today. Even on the smallest fucking time frames, if I go down to a 5 second, you will see that this model is playing out the exact same way that we would expect anything to. Accumulation. Oh my God, we have all of these equal highs. And we have an imbalance here. What do you think is going to happen? Stop raid. Takes out all of these highs just to what? Dump. So when I always say, guess what, too? Wait for time and price. This is what I mean by time and price. I am not looking to take, again, keep in mind, what I'm explaining here is if this was on a bigger time frame or on any time frame, if I'm looking to take an entry or I'm looking to recognize what price wants to do now, all of the people that are like, oh my God, Justin, how are you so efficient? How do you know when the market's going to move? How do you know like when you're going to get a big move? It's because you guys are taking trades here and I'm taking trades here. In the simplest way I could explain it. In the simplest way I can explain it is I'm taking trades after the manipulation. Again, like we say, do not take trades in an accumulative phase. You are looking to take trades in a manipulative and distributive market, right? Again, going back to fucking power of three. This is when everything fucking starts to connect. The puzzle pieces start to fucking come together and you're like, holy shit, I fucking get it. Power of three. How does the market move? Manipulation, distribution. I am not taking trades here. I am taking trades here. It's all fractal. Mind fucking explosion. I bet you guys are like, oh my God. I love these charting sessions. Keep in mind too, I had a couple drinks before starting tonight, so we're going off. We're going in. We're going deep. Actually, if anybody wants to screenshot this, feel free to fucking to screenshot this if you want. Yes, this session is recorded. All right. Okay. Any questions so far on that before we get into what we're looking at going into tomorrow? Any questions on that? That whole spiel. Wouldn't the market adapt to the more people that begin to recognize this stop rate? Is this a possible issue that could affect traders in the future? No, I don't think so at all. Took this NQ at 11:30. Took it off because it chopped. Is it a valid entry? If it's not lunge, 15-minute fair value hold, internal sweep. Yes, based off structure, that looks great. Yeah, based off structure, that looks great. How did it play out though? Since it was that today at lunch? It might have been a little bit choppy. If that was today, then I would say it's not a good setup just because again, it's waiting for FOMC. So yeah, but like if it's another day and you're trading that based off macros, then yeah, that should run. That should work. That should run. If everyone is trading after a stop rate, the market will be forced to do another stop rate to generate enough liquidity. No, it's not. That's not. Okay. Number one, don't worry about shit that you don't need to worry about. Number one, like don't worry about if the algorithm is gonna. Everybody always says, "Oh my God, what if ICT concepts stop working? What if somebody changes the algorithm? Oh my God." Guess what? Me and you have no fucking idea if that will ever happen. So why the fuck are you even stressing about it, bro? Instead of working your ass off to learn it and make a bunch of money with it, bro. That is my question. Why are you even thinking about that? Start taking advantage of that shit ASAP because you have the fucking tools. I'm giving you the goddamn fucking sorcerer stone of the goddamn market right now to be able to figure out and read this shit like the back of your goddamn hand. So don't care. I don't care if it's going to change in the future. I really don't. When it happens, guess what? I'll fucking learn the new algorithm. But I don't think that'll happen anytime soon. Anytime soon. Because there's no reason it will change. There's no reason. Didn't take long as I felt there was enough to play. So. Are you saying this long? This is the long that we took. Yeah, this is great. Okay. Oh yeah, any trades that you guys we'll do trades. We'll do trades. So any trades you guys want me to look at, let's do those. Took this trade, thought it was a good entry, got stopped at a good entry. Let me see. When was this? Again, I think this setup has to do with just time and price. From what I'm looking at, it looks good, but I wish I could see what's going on the bigger time frame. So it's hard for me to say if it's good or not because I don't have the external bias or the bigger time frame here. Again, same thing here. I wish I had more context here. If you guys can, give me a screenshot of smaller time frame entry and bigger time frame bias. Because it's really hard for me to like give you really good like advice and like reviews if I don't know like where your head was at on everything. Would you say this is an A+ setup? Didn't took it due to news. If there was an intern, what time frame is this? 1 minute. I would be looking to take this. This would be the first entry. Again, I think this is fine for a second entry. But this is where I would really want to be looking to take that long. Do I need the 15-second time frame? No, you don't need it. You don't need it at all. I love the 15-second time frame though. I love 15-second and 30-second because it's easier to trade the internal model. Listen to your heartbeat. Yeah, this isn't bad for a nice scalp too. We had an SMT on a bigger time frame too, so I actually like this. This looks good. I like again, what I like about this trade is you're not going for sell side. That's what I like, is you're trading the internal liquidity because you know that we're going to shop for FOMC, or at least I'm hoping that you were expecting that, and that's the reason why you did it. But risky entry question mark? No, this looks fine actually. I mean, again, this is is there buy side swept on a bigger time frame or no? Because again, this is just regular 2022 model. If so, market structure shift, imbalance, wait for the rejection. Again, really good risk reward on this. So the risk on this is really nice. Yeah. Again, just I need a little bit more context, but other than that, it looks fine. I wanted to take this first trade, but I hesitated, and after taking that high, and we knew we wanted to come back to the 5-minute fair value gap, but I'm not happy I took it. I know what I'm looking for 90% of the time, but I need a lot of work in my psychology. That's one of the things holding me back right now. Yeah, that long looks good. Short is okay. 1-to-1 short, it's not bad. Yeah. It's not bad. Again, in my opinion, I think you're just taking trades to take trades at this point. Tried to take a scalp on oil yesterday or today. External was swept, but it was very bearish and waited for the stop rate. Good rejection off 5-minute. Would this be considered low probability, higher time frame? What was this on? Oil? Again, guys, if I'm being completely honest, I would say stay away from oil. Even if oil is just lower probability. Oil is just constant low conditions, low probability conditions. Like, I really can't even rate the setups on oil because they look great, but guess what? Most of the time, they're going to still fail. Oil is like off and on. I really don't like trading oil at all, and I recommend you shouldn't if you want to be consistent. This looks a nice little scalp SMT. Short to that sell set level. Looks good. What if I struggle to catch your entries without the 15-second? Then I say, again, 15-second is a nice investment if you want to see what the internal model is looking like if you want to catch those entries. So is this accurate? Market maker buy model, just a bunch of power of 3 models, but on the fractal level, market maker buy one time frame will just be power of 3 for some larger time frame model. Yeah, this is pretty. There's a little bit. It's not going to be exactly this, but this is exactly what I look for. This is exactly what I want to see. So yes, this is great. This is great. I would say screenshot this. This is exactly. I want to add more to this, and I'm gonna make a Twitter thread in the next 2 days. I'm working on a Twitter thread right now that's gonna include like a lot of models like this. But this is pretty much when I say market maker buy model, and I'm looking for opportunities. This is what I'm looking for. Right? I'm looking for the recognize what the bigger time frame model is and wait for the manipulation on the smaller time frames to continue the external draw. Right? That's why I say, what is the list that I always say? What is the number one thing? Have whatever the external draw is first. The external draw is recognizing what model are we in. Am I taking trades on this side, or am I taking trades on this side? Am I in a sell model? Am I in a buy model? Am I looking for longs or shorts? That's number one. Number two, where am I looking to see a manipulation? Am I looking to see buy side, or am I looking to see sell side swept? If I'm short, I'm looking to see buy side swept, and that's going to be the manipulation move to continue to whatever the sell side draw is. So I zoom and I notice, where are we in the model? Where's the external draw? And I look for manipulation on the smaller time frames to continue whatever the external draw is. So this is exactly what I look for. Absolutely. That's like a great model. All right, let's go over what we're going to be looking at going into tomorrow. So let's take a look at NQ first. Okay. On NQ, I'm not going to lie. We could go either. I'm going to be super patient going into tomorrow. Again, recognize, what do I need to see happen first? Look at this NQ chart right here. Look at this NQ chart. The last 4 of these 4-hour candles has been straight up. So I'm expecting Thursday, either accumulation, fucking slow pullback, range day. We need to do something because we've just been straight up. So I think tomorrow's going to be boring as fuck. And I will not be trading on Friday because it's NFP. So I'm really deciding if we should just call it a week early. I probably will trade tomorrow. I won't trade Friday, but again, what has to happen first? Recognizing the model, recognizing structure. Where are we right now? Zooming in on a smart time frame. Is there enough structure here to base a bias off of? Not really. The only really bias I have here is I think that we're going to rebalance this inefficiency. So I think ES wants to push up. Now that we've ran this imbalance, we just ran through this daily imbalance. I'm expecting price to rebalance, number one, to this high. I think this is where we're going on ES, is I want to see this high being taken. But what needs to happen first, what I'm expecting to see happen, is a pullback to either here or here to then go higher. So again, same thing today. Recognizing the draw higher. We're super bullish order flow, looking to see a pullback, rejection of a bigger time frame imbalance, and then higher. Any questions? When I'm taking entries with 15-second time frame, stops my SL and pips is so small it calculates my max lots. Any idea how to help? Don't want to accidentally over risk. When I'm taking entries on my SL and pips is so small, calculates my how to calculate your loss, is that what you're saying? I do this. Whenever I'm looking to take a trade, I'll mark in like wherever I'm looking to enter, wherever my stop is. On TradingView, right click, create limit order, however many contracts I want to use. And then I'll just see what my stop loss is. So I'll move my stop and say, hey, guess what? My stop loss is going to be 1,600. My PT is 1,000, blah, blah, blah. Whatever it is. That's how I normally will check my risk. Chart video will drop tomorrow. I got to film it still. All right, guys. that is pretty much all I have for you guys tonight. Fucking great session tonight. I'm glad that we talked about. I think today was actually a really good day. Tonight's session was really good. Hopefully that you guys got something out of tonight's session and learned a lot out of going over those trades, going over market maker buy and sell models, going over how I view the market, how I just think. Because the whole goal here is I love doing these charting sessions at night because this is when we really get to grow and really we try to get things to connect. And I'm trying to shortcut that learning curve because for me it takes some time, but the more that I can start to impact my experience and knowledge on you guys, the faster that you guys will learn, and that's the whole goal. So, all right, guys, enjoy the rest of your night. Hopefully you learned something from the night. I'll post the recording so you guys can go back and watch it. I will see you guys tomorrow morning. Enjoy, get some rest. I will see you guys then. Peace.